Good afternoon, everyone. It's Pablo Zuanic, equity analyst at Zuanic & Associates. Thank you for joining us today, and happy Halloween, everyone. And we're very glad to have a panel here to discuss the debt capital providers in the industry and their outlook for where the industry is right now. Peter Sack is joining us from Chicago Atlantic Group, managing partner there. Neville, CEO of AFC Gamma, and Erich Griffin, partner at FiSai. Welcome to all the three speakers.
Thanks for having us.
So let's
Pablo, thank you.
Just a brief introduction here. Maybe Dan, I'll start with you. Just briefly about your company, just broad commentary as an introduction. Thanks.
Sure. So AFC Gamma is a institutional provider of capital focused on the cannabis space. We're structured as a mortgage REIT and trade on NASDAQ under the ticker AFCG. The portfolio today is about $300 million of loans dedicated to the cannabis space, and inception today, we've deployed about $800 million into the cannabis industry.
Thank you. Peter, go ahead.
Chicago Atlantic, similar to AFC Gamma, we're a lender focused on lending to the cannabis space. We operate a public mortgage REIT, a public BDC, and a series of private funds, investing in both across our vehicles, investing in both real estate backed and non-real estate backed investments across the cannabis supply chain.
Thank you. And Erich, about FiSai, please. Thank you.
Yeah. So FiSai is a cannabis dedicated fund, predominantly in first lien debt. We're across a number of names. We traditionally stay with the tier one and a few of the tier twos. Got about 240 million AUM as of today. So that's what we are. So very similar to the other guys, except, don't do the sale leaseback side of it.
All right. Thank you. So look, for everyone listening, as usual, we take questions by email, through the tweet bubble, as we call it in Spaces, and also through the chat room here in Zoom. But we don't take questions live. I read them out, but feel free to send them over. Look, let's start with and again, a reminder for everyone out there, earnings starts next week. This call is not about earnings. It's not about what's happening with the third quarter. It's more macro, particularly ahead of the election, right? But before the election, Erich, let me start with you. Your view about where the cannabis industry in the US is right now.
Well, I mean, Halloween's pretty appropriate, isn't it? It's kind of trick or treat next week. And we have a long history of trick versus treat. So hopefully we can turn that around. I think we're very constructive. I mean, we started the fund about a year ago. Everyone knows the debt markets at that stage were effectively broken. They've clearly recovered. I think, where we play, again, predominantly on the tier one and the tier two space, we feel really good about some of the tier ones. The leverage metrics continue to get better. Those footprints really help. I think, Pablo, this earnings season is going to be fantastic. I think you're really going to continue to see the divergence between the tier ones and the tier twos. And you're going to see that size matters, and high quality management teams with experience, with balance sheets that are not completely offside, are going to continue to do really well. And I think our view is 2025 is the year of consolidation. Bigger is better. Get the best teams to manage the largest portfolios. Why should we be paying for B teams for C performance for D outcomes?
Thank you. Peter, your view of the state of the industry.
Yeah, I like Erich's framing, particularly for the large cap companies. I think we spend a lot of time thinking about categorizing various markets into the three buckets of nascent, emerging, and mature. And I think particularly in the mature markets, or nearing closer to mature markets, agree 100% with Erich that consolidation will be a story of 2025. But in the emerging markets and nascent markets, it's still a growth story of a lot of young, hungry entrepreneurs building what are now small businesses and will become medium businesses and maybe large businesses on their own, or parts of bigger businesses in 4 years from now. And those are places like Ohio, as dispensaries are built out, that were licenses that were newly issued. Kentucky is the newest nascent market as licenses get issued and entrepreneurs start deploying capital. And so I think there's still pockets of really high growth and high risk equity capital going in, and that'll soon be followed by debt capital as well, that we're really excited about.
Thank you. Dan, same question for you, state of the industry. And as you discuss the current state of the industry, maybe also touch on how you factor 280E into analyzing the balance sheets of the companies. Thanks, Dan. Go ahead.
Yeah, sure. So, I think it's a little bit of a mixed bag today from our perspective. You have markets like Illinois and New Jersey that were big profit centers for some of the big public companies, at least. And you're seeing a lot of additional competition come on, particularly on the retail side of things. So, there were big stores in New Jersey, $30-40 million stores that people used to talk about. As additional competition has come into that market, that's something that pressures both the sales and the gross margin side of things. And just like the incremental margins on a $40 million are great, the decremental margins going from 40 to 20 are not so great. So I think you're going to see that, probably in some of the numbers as people report over the next week, just that additional competition coming in. Offsetting that, people have gotten more efficient, leaner cost structures, focused on automation, focused on, saving every dollar that they can and running really lean and efficiently. And you've seen that in some of the tier one numbers that were reported last quarter. And so I think that's a good trend that'll continue. Ohio was a positive, not quite the shot in the arm that people were expecting. That'll offset some of the pressure in New Jersey, Illinois, and some of the other, more mature markets like Michigan and Mass. But overall, I think, the debt markets are better than they were a year ago, as Erich mentioned. People have gotten their cost structures more under control. And you have Ohio with a tailwind there, and the vote in Florida and the potential for PA flipping sometime next year. So there's a lot of positive catalysts on the horizon. I'm just not sure that, especially if you go below the kind of top few operators in the tier ones, that you're going to see that translate into financial performance, at least over the next couple of quarters. I think on the consolidation side of things, I personally have a little bit of a different view. I was at Ascend for 5 years. This is not commenting on anything that's current, but we certainly looked at and talked to a bunch of other operators about getting scale. And there's obvious synergies between public company costs, other overhead, to scaling up. The problem in this industry is it's just a massive puzzle that you have to work through with the overlap that most people have in states to figure out how you merge two of those assets together, what you keep and what you don't keep by virtue of the regulatory caps. So I think that makes things difficult. You saw it with the Cresco Columbia Care deal. It's not the best time to sell assets. So if selling assets is a solution, prices are difficult. So I think you'll see an uptick in M&A, but I would expect it to be more of the bite-sized stuff, state-by-state stuff that people have had success in this industry historically, relative to the big bang M&A, given some of the regulatory hurdles you face. And as I say that, there's probably going to be a big merger announced next week. But that's just what the history of the industry on M&A has taught me. And And both, I think, are good things, by the way. So I think you need more consolidation. I think it is people have to figure out how to make it happen. It is just particularly tricky and difficult in this industry. On the 280E side of things, look, I think our view is it's getting done. Republican, Democrat, otherwise. I think the timeline for getting it done is TBD. I think if the last 4 years have taught us anything, things take longer than expected. As long as it's retroactive to January 1st, 2025, it doesn't matter from a financial perspective, whether it's February or December 31st, 2025. But obviously for sentiment, it matters. I think on the credit side of things, like most people are not paying 280 taxes. Like Peter looks at a lot of deals, Erich looks at a lot of deals. Like there's, for the most part, I think 2023 on, people have taken the position that 280 doesn't exist and they're going to file as a non-280 filer, rightly or wrongly. So I think, a lot of the cash flow benefit that you will receive from 280E is already reflected in cash flow performance currently, and EBITDA is a pre-tax metric, so it's obviously not in that metric. I think removing the uncertainty is good. Removing the uncertainty around the liabilities on the tax side continuing to build and getting some certainty there is a positive. I'm not sure it's like a huge mover in our underwriting one way or another because, people are already getting the cash flow benefit of non-280 today by not paying their taxes.
But on that point, I just want to follow up on a couple of things there. So regarding that, some companies call it uncertain tax provisions or uncertain tax benefits, and they're a big number on the long-term liability side of the balance sheet, right? I suppose that all three of you would factor that when you quantify the debt of these companies, right? I mean, just a brief answer, Dan, but how do you think about, what I would call the current tax debt on the books? I hear you in terms of
I think it's debt. If we lend, the IRS can't prime you, right? So unless there's an existing tax lien, the IRS cannot prime our debt with the tax liabilities that are out there. But we do view that as leverage. Hopefully it's leverage that can be settled for, some reduced amount in the future. And I think that's the bet that people are making. But it is a liability. And I would swing it back to like the M&A side of things. So where it gets really difficult with this tax debt on these businesses is, let's say a company gets into trouble and you go through a process where they decide to sell the underlying collateral to pay back your debt. The problem is that in most industries, you would just do an asset purchase to wipe the entire asset clean and leave all the legacy liabilities behind. The problem in cannabis is in certain states, Pennsylvania, Illinois, a bunch of others, you can only do an equity transfer of the entity with a license and not an asset transfer. And therefore, all of the legacy tax liabilities and other liabilities are then the obligation of the acquirer. And so that's where it becomes dangerous, where you actually have a degradation of your collateral related to the liabilities that stick with the collateral if people are not paying their bills.
Right. Anyone else want to add anything else on the 280 subject? Erich, go ahead.
No, I would just go back, Dan, I agree with you. I think, M&A, having also been at a company myself, I have known how hard M&A is. But, just taking a sense, when you start off at $10 a share, once you spend enough time below one, finally, the powers that be, which is, M&A is really, how does the major shareholder, the CEO, do? So you have to get rid of the founders because they're difficult. You bring in a new management team. But I think one of the advantages, Dan, when we have going into 25 is I think realistically people understand that they're not going back to the all-time high. So I think your ability to do sales and Cresco and Cannabis was a great example of they just needed too much money from assets at a time they could never get it. So their requirement on those sales killed that deal. And then, Peter, what you said, which is these great kind of third and private operators, this could be a great time for them to hive off assets out of the big deals at very attractive prices. So I think it really then it just gets down to, you know, you had a $2 billion market cap at one stage. Now it's 110. Maybe 200 million feels like a good number, but you're not getting back to the 2 billion. I think we just need to get to that point where those valuations are historic. And I think you can make deals happen because assets can then get priced at levels that they can actually trade at. So I think it's hard to navigate, but luckily we've gotten rid of enough founders. And I think they are the problem, because they tend to be large shareholders. They're very bullish people. Once you bring in just a paid for hire CEO, with a couple of million shares, I just think it's a lot easier for debt holders and other equity holders to initiate deals that make sense for the stakeholders as opposed to the management teams.
Erich, before we move on, just one point on the M&A question. So what about companies disposing of certain assets, like we saw in the case of cannabis, right? Selling Virginia, one of the two licenses, or selling Florida. Is that, you think we will see more of that, but it will be just whole company M&A? I know you touched on it, but do you think that was very unique situation, or could we see? And I'm not asking you to comment specifically on cannabis.
No. I think necessity sometimes is a wonderful motivator. I think my point on that, Pablo, would be more along the lines, which is, I think some companies can be broken up into the sum of the parts. I think that's a good deal ultimately for shareholders. I think some of them could pare back assets they don't need to delever. So I think it could be a mixture. I think, Pablo, what it can't be is, unless I can buy someone and every single asset they have is complementary to every single asset I have, I won't do the deal. I think no deal is going to be perfect. I think there can be lots of people picking off the sums and the part. And Peter, we talked about this when I saw you, which I love the fact that there are well-capitalized, low-leveraged new companies who be like, oh, you got a great cultivation and 8 stores in Ohio, and it's a duplicative asset. I'll buy that. That works for my small entity. And I don't think we had that during the Cresco deal. And then they had some crappy assets. I mean, New York at that time was a really tough deal to sell. I mean, they got hit by bad timing, bear market. Prices that they needed to make the deal work weren't realistic when they announced it. And every month after announcement, they became less realistic. And so I think there is a change in that. And so I think it's going to be creative. And I think that creativity is going to need to be motivated by stakeholders, as opposed to just hoping management teams think that through. So I think it's going to be a combination.
Thank you. Look, I mean, just moving on, Peter, I'll start with you. I mean, talking, of course, about next Tuesday, let's talk about scenarios. How do you see them in terms of how the election plays out, the future makeup of Congress? I know it's a bit of a guessing game right now. And how can that impact rescheduling, safer banking, uplisting, or even full legalization? I'll start with you, Peter, on that. Yeah.
Mm-hmm. I think rescheduling, to Dan's point earlier, occurs in 2025, regardless of the president. I'd say marginally faster under a Harris administration, but I think there's enough uncertainty with the process in general that the margin of error between the two presidencies might as well be the same. Safer banking still seems stalled, regardless of the administration. I think there's, despite bipartisan agreement, I think its focus, its presence in the national mindset and prioritization is too low. And it takes a certain level of initiative and momentum to resolve deadlock, even when people are in agreement in principle. Uplisting, gosh, would be so impactful, but still seems like that is perhaps behind after rescheduling and after SAFER. But perhaps others on the call will disagree. And full legalization feels so far away that it's not even worth discussing.
In a galaxy far, far away.
Over to you, Dan. Same questions.
Yeah, I'd agree on the rescheduling side of things. I think once you go further down the list, though, I'm of the same mind of Peter. It's just, it looks like the Republicans are very, very likely to take the Senate. If it's John Thune or Cornyn, like those guys are not going to be pushing safer banking through. And the problem is politics, like Peter said, the prioritization. Politics drives policy. And the politics are not there, right? The Democrats want some sort of social justice initiative attached to safe banking, which I think all else being equal is a good thing. The problem is the Republicans don't want to give them that win. And, I don't know about you guys, but like, I don't see any cannabis business that doesn't have access to bank and is hoarding mountains of money in their dispensary today. Like, people have access to bank accounts, can buy weed in 70% of America free and clear. Like, the rescheduling and that messaging, I think, hits. I've yet to hear a rational, true reason why the American people need safe banking. And that's true for a lot of bills, but I just don't think that it's getting through until there's the political will and motivation to get it through on both sides of the aisle. And I don't see that happening anytime soon. I think, I think the rest of the stuff is obviously very impactful, but further off. So I think rescheduling gets done. I think Republicans being supportive of cannabis generally this election cycle is a good step and a good step for the industry. But I'm also cognizant to the fact that we're in the student council promising the sixth graders an ice cream machine in the cafeteria part of the election cycle and just trying to buy votes and say whatever's popular. And so I'm not sure there's a ton of follow-on post the rescheduling side of things like I think some people expect. And could be totally wrong there, but that's just my view.
Erich, the same question for you, if you.
I'm going to answer slightly differently, which is one, I think the vitriol attack on cannabis by DeSantis is very interesting. And I think the question is, to me, is it really Amendment 4 he's going after, which is abortion, and he just lumped cannabis in there? But the real question is, come January, do we see less vitriol attack on cannabis once we're through an election? I don't know the answer to that. I suspect it becomes slightly less vitriol and hopefully more constructive, but we'll see. What I am really sure of, Pablo, is MSOs looking to capitalize on a Florida win, if that even happens, and whomever lands up in the White House. I'm pretty convinced that very little money flows into the sector. Stocks don't really go anywhere. You can't really go out and issue 50, 100 million of equity to replace your balance sheet, and you're kind of stuck where you are, which is a low growth business currently, lots of obstacles, no safe banking on the horizon. Who knows what's going to happen with rescheduling? And so what you're going to do. And so M&A and consolidation and cutting costs continues to be a story. I hope I'm wrong, but I just don't see, come January or February, the MSO is back above 10 or 11 or 12, or whatever people think it is. There's just so many negatives on the horizon. And the bears are going to continue to just, make mincemeat out of every staggering outcome, which is, when does rescheduling happen? Who's going to be the AG if we have a Republican presidency? I just think there's a lot of uncertainty. So I think it's really difficult And Dan, I'll go back to what you said. What is the one thing we've learned in cannabis? Everything takes twice as long as the longest you ever thought it would take.
Right. And I agree. And what I would say is that we had this situation before the prior election, right? That ran that we saw in the MSOS ETF until 55 in February 2021. And here we are with both candidates speaking more positively about cannabis. And like you said, we are at 7 on the MSOS ETF. So it's like people don't believe anything will happen. I mean, I don't know if anyone wants to add anything to that, but the sentiment from both parties and from both candidates, it's a lot more bullish for cannabis than it was 4 years ago. But here we are. It's like the money is not flowing in. Anyway, but to your point, Erich, I mean, the main reason for that is that people just gave up, or people are just on a wait and see mode.
Look, I think let's see what happens next week. Let's see if Florida goes through. I think that will be a positive as opposed to yet another negative. And let's see who the administration is. And again, if the Republicans win, the first thing the Bears are going to come out and say, well, who's going to be the AG? It's most probably not going to be a pro-cannabis person. Again, I'm not a Republican, but I would suggest there's probably someone who's at best neutral. And then we got the rescheduling, and that will have its own noise around it. So I don't know. I feel that, unfortunately, we need a few wins back to back before the sentiment changes. I don't think you can just have one win and uncertainty, because I think the uncertainty keeps tremendous pressure on people sitting on the sidelines. I don't know. Maybe you guys have seen different. I sure haven't seen people knocking on my door to pile into cannabis next week.
And the uncertainty, even uncertainty around positive things, is problematic in some ways. Like
exactly.
Binary yes or no. 280E, in some ways, binary yes or no. Well, the timing is uncertain. There's so much activity that gets halted on something like Florida because an acquisition makes sense at one really big price if it's yes, or a much lower price if it's no. And so everyone just pauses and waits until it comes through. And the same to some extent with 280E. If companies have built up tax liabilities since 2022 or 2023, a lot of activity just gets halted because no one knows how that tax liability might be treated. And you can't buy a business with 20 million of 280E tax liabilities on it and not know how that's going to be treated. It makes it too uncertain, and it's impossible to document around. And so even when the uncertainty is only positive, like Florida going adult use, it's only positive. The downside is it stays where it is. That still puts a halt on activity that's unfortunate.
Right.
Do you guys? Sorry, not to hijack Pablo, but an interesting thing I saw people asking, like, do you, and Erich, you commented about it. Do you think Amendment 3 or Schedule 3 is more important for the industry? I'm just curious what you guys think, and Pablo too.
Go ahead.
That's a good question. Pablo, you go. No, you're the analyst.
And from my perspective, it's rescheduling. I think it's more important. I know Florida, it's important for a few of the stocks in the group, but from an industry perspective, I think rescheduling to me it's more important. Improves the balance sheet and the cash flows of many of these companies. From a political perspective, rescheduling makes it easier for legislators at the state level and at the federal level to enact future laws and other reform. So I think it has a lot of benefits. Of course, Florida is important, but I would say the reason I don't want to minimize Florida is I know you guys talk about long term in a far away galaxy we would have full legalization and interstate trade, but to me that will always be an overhang on the industry. Any Wellington or Fidelity long-term only fund out there or hedge fund that's trying to invest in cannabis, they always ask this question: what is the industry going to look like in 5 years' time? And when you have that question mark of when do we have interstate trade, what does the future look like? Then there's a question in terms of the value of those restricted licenses. And of course, yes, Florida would be bullish for some MSOs in the short term. And I would not discount that. And if it passes, it would be very beneficial to some of those stocks. But if you're asking some of those long-term only funds, if they were involved in the space, how would they handicap that? They would be asking the question, well, for how long is that going to be great? how will that market look in the future? Or is DeSantis going to change the rules of the game somewhat, even if reg goes ahead? So, I mean, my very long answer to your question, but because of that, I put more value on rescheduling getting done than. But anyway, I don't know if I.
So Dan, I would answer it is, clearly, getting to Schedule 3 solves a huge problem. I do think though, if Florida fails, I think it's going to be very hard for anyone to believe that rescheduling happens because it's been built up that we're going to get this through. So I think Florida failing just is more bad news. And really, until you get the final rules on rescheduling and it's enacted, the market is again in that nowhere place. So long term, absolutely on rescheduling. Short term, I think Florida coming in at 59.875 is going to be hard for the industry. But I think then you get, okay, what's next? Well, we got to get bigger. We got to get rid of costs. I think the consolidation, you almost have no choice. And the equities at that stage will be so valueless that it won't really matter where you buy it, and who's buying you themselves will be hugely discounted. So kind of a, there's the word type of swap, but I don't think I'll say it on here, but it's a not such good thing swap for not such good thing swap. So I think that will be interesting to see how that plays out.
Anyone else want to add on the subject? Okay. Peter, I mean, one question, I'll be very careful the way I ask this question, but in the case of Florida, you made the argument that if it doesn't passes, it stays where it is, so it's no change. But I could make the argument that it could make the market tougher in Florida, right? We've seen more capacity coming in. We've seen companies adding more stores, right? So if it doesn't pass, does it make that market, that state more problematic? And again, I'm not asking for a very detailed question because I understand it's a forward-looking question, but either Dan or Peter, how do you think about that? And how does that impact the way you manage your business there? And again, only answer high level. I know it's a forward-looking question.
Yeah, we underwrite businesses, whether it's in Florida or anywhere else, based upon the market as it stands.
Right.
And so we've conservatively underwritten all of our investments in Florida to the current market, and recognizing that there's a risk of overcapacity should adult use not pass, because as you noted, many operators have built out locations and built out stores in the expectation and hope that adult use does pass. But as debt lenders, we're focused, we have to keep front and center the potential downside, the lack of these upside catalysts, and think about the world without those catalysts that we can control. And so going in with that mindset, I'll be extremely disappointed if adult use doesn't pass in Florida. But I don't have significant downside exposure through that process necessarily. I think what I was getting at more broadly, though, is that there is a little bit of positivity in it not passing, and a little bit of silver lining, and someone's going to hate me for saying this, of the uncertainty going away.
Mm.
And so I think that whichever way it goes, there will be a little bit of silver lining, and people saying, okay, now at least I know, now I can make other decisions about my business, whether that's capital allocation, the $40 million that I was allocated to expanding my cultivation in Florida, now I can use it in Ohio or Maryland or somewhere else. So it does just grease the wheels of motion in the industry and decision making.
Right.
Either way.
That's good. Thank you. Dan, do you want to add any color on that subject specifically?
Yeah, I think we made our second investment first in the current portfolio in Florida back in March of this year, and similar to Peter in Chicago Atlantic, we were underwriting that business on the medical performance of the business and the ability to take some market share in a market where patient counts are moving down and additional stores are going to come online. I do think the capacity side of things, more stores obviously is more competition. given the vertical nature of the Florida market, it's not, a liquid market. And so if somebody is over capacitated on the grow side of things, like, yeah, I guess you could slash your prices at retail to slightly above the marginal cost of growing, but like it doesn't really help you that much. So I think um a little bit worried about the retail side, although there hasn't been that much added, and obviously any in process projects, or at least, the go plans that people have if A3 passes come off the board on the retail side of things pretty quickly. And then given that a lot of the grow capacity is trapped in vertical, or all of it really is, you're not going to have as much, as much of an impact if people added capacity on the wholesale side of things. Some, but like, there will be some. It'll get tougher, but there's more kinks in the pipes in Florida given the regulatory framework.
Yeah, no, that's great. Thank you. I appreciate all that color there. Look, I'll be mindful of the time here. I'll move the discussion now to, Vice President Harris. She has a to-do list, right? And point 6 there says legalize recreational marijuana. I know that list only came up recently. I think someone mentioned this is going to be in a galaxy far, far away, but I just want to understand how each one of you is thinking about this. I mean, from my perspective, she's bifurcating. She's talking about legalizing federally, which means states cannot opt out, maybe introducing interstate trade, maybe even a tiered structure as we see in alcohol. I know these are huge changes, right? And I suppose there would be a lot of pushback. And that's why maybe you are right, Erich, in saying it's going to be in a galaxy far, far away. But I'll start with you, Dan. But how do you think about if she gets elected and she tries to legalize recreational marijuana? How do you think that plays out? Or do you agree with that assessment that, look, this is going to happen in the very, very long term, not something to factor in the short or medium term?
Dan? Wasn't something similar on Biden's list 4 years ago? Like it's just like we're, again, ice cream to the 6th graders every day. 5 cents a cone. Like we've got a lot of steps to take. We've been battling for rescheduling, which is way, way, way overdue. And quite frankly, a crime that these companies get taxed at the rates that they get taxed at. But we've seen how much of a battle that is. The politics aren't there to drive the policy. It's popular. But, there's not a big change. The march toward legalization continues, and more people have access to AU cannabis every day. I just don't see this as a priority, and it's a lot of work. Like I remember back in the early days of Ascend when we were raising capital, and like people would ask about legalization and the impact of legalization, and like we thought it was a long time away, and we just say like, maybe sometime in 2026 or 2027, which seemed a long ass time away in 2020. And I'm sitting here today in 2024 and I'd give the same answer. Like, I just think there's a lot of work that there's a lot of intermediate steps that have to happen first. And this is not just flip a switch, go from a Schedule 3, go from Schedule 1 to full legalization overnight. And we've seen that with a simple change like rescheduling. And we've seen the issues around safe banking. So I think it's a far way out. I think the question behind the question is for like our business or the debt business, how does that change things? And I think like you look at the debt business today in cannabis, it is so immature. Like it's unitron structures, tippy top of the capital stack, and all asset liens. So like look at, basic, develop bond markets. You have AB structures on term loans, you have seconds, you have senior debt, you have unsecured debt, you have mezz. Like, let's just fast forward here 5 years and let's say we get to full legalization. Like there is a lot of innovation and adaptation that I think can happen in the debt markets to make everything more efficient for everyone. And all the people on the phone are going to figure that out and adapt over time and figure out how to play as the industry evolves.
Thank you. Peter, on the same question?
Nope. I think of those campaign points as A, aspirational, and B, thematic. And so I don't read too much into the specifics of legalized cannabis, more of think of that as a general theme of a priority that that may likely be aspirational based on the priorities that exist and what the congressional map looks like.
Right. Erich, any thoughts on that question of priority number 6 on the to-do list? I guess you said at the beginning, the galaxy far, far away.
We can't even get with with 25,000 tons of medical backing. We can't even get rescheduling done on time with the Democrats in office, their own AG, and that got delayed. I mean, just the idea that I'll ask a more broad question. I wonder how many people in the administration or in Congress actually know the difference between rescheduling and full legalization. I mean, do you think they actually know the difference? Like, kind of sounds the same. Like, I just think that like it's just an impossibility. I think it's so far out. I just don't know how DeSantis as a as a kind of well-known Republican is fighting tooth and nail, using opioid money to bash 3 in Florida. I just don't see how anyone can think that Harris is going to be even close to. So I'm with you, Dan. It's like let's feed the monkeys as many peanuts as we can, and then we'll worry about how we pay for the peanuts down the road. But it's not happening. I just can't see it. There's so much complexity. There's so much bias. This is a political game in many places. So no, I can't see that.
That's great, Connor. Thank you. Look, I'm going to take a couple of questions from emails that I've been receiving. Anyone can reply. I didn't factor the David Boies lawsuit in the Q&A here, but that someone is asking that's moving faster than originally planned. Do you guys have any views or thoughts how that may play out? Anyone?
I have a view. I might get in trouble. Look, I'm a numbers guy. I go based on the math. And the math is the Supreme Court gets petitioned for 7,000 cases every year, and they hear between 60 and 70. So you have a 1% chance of getting in. Not all cases are created equal, right? But you have one interested justice, right, and 8 other ones that maybe care, maybe don't. And I think out of all the issues that we have to figure out in this country in front of the Supreme Court, again, this just gets pushed down the priority list. And so I think it's going to take longer than people expect if it ever gets there. And people say, David Boies, why would he take the case? But Boies Schiller is not the same law firm that they were 10 years ago. And I can think of 5 million reasons why David Boies has taken this case.
Okay.
And, just on that, Dan, the Supreme Court may have a few things it needs to do between now and middle of next year. I mean, this election could be lawsuits. Like I agree with you, Dan. It feels hard. If you've ever actually been in the legal system, it's so damn hard to predict the outcomes. It's just timing everything. So we wish them the best. A lot of people have put a lot of time, effort, money into it, and I think that's great. But very difficult to.
Okay.
Very difficult to get a number on that.
Thank you. Look, for those of you listening, asking me specific company questions, I have agreed with the 3 speakers that given that it's earnings next week, we're not going to ask them to company-specific questions. We're not going to talk about the third quarter. We're going to try to stay away from forward-looking commentary, all right? So pardon to those of you asking me company-specific questions. The only thing I would use that as a segue for you, Dan or Erich, if you want to add any color specifically about your companies. But again, I'm not asking anything specifically, and I'm being mindful that we are entering earnings, and I don't want to make any forward comments here. But I don't know, Dan, anything you'd like to add about AFC Gamma for those that are not so familiar with the company, in addition to what you said at the beginning?
Look, I think the initial overview is pretty good, and I think I would just say for the debt side of things of investing in cannabis generally, because I think it applies to all the folks on the phone here. Like, you have the opportunity because of the supply-demand imbalance in capital that exists. There's a lot of capital that's needed for refis, let alone looking at M&A, let alone looking at turning on capacity for AU or medical expansions and new states coming online. So there's a ton of demand for capital in a very capital-intensive industry. And you've got, half the debt providers in the industry on the phone as we speak. And so that supply-demand imbalance, I think, sets up things pretty well on the debt side of things. And we're not lending to Apple or Google. These are emerging companies and emerging businesses in a federally illegal industry. And so we are able to get mid to high teens IRRs, at least that's the target that we look to achieve. And being able to invest at the tippy top of the capital stack and get equity-like returns is normally a really good place to invest. And that's across industries and across companies. And so I think, the debt side of things, as difficult as the industry has been generally on the performance side of things, and you've seen that reflected in the equity prices, people perform pretty well on the debt side of things if they're nimble and they're on top of it and they know what they're doing and are dedicated to the industry. So I think it argues for an allocation in anyone's portfolio that's interested in the space.
Erich, anything you want to add on the subject? Yeah, from a FiSai investments point of view. I know you're private, but yeah.
Clearly, the last year being in the debt space for FiSai has turned out to be an incredibly good trade. So let's see how the year ends. We don't know. Yeah, Dan, I couldn't agree more with you. And I'll come back to the point where I think, you got $2.5 billion maturing in 2026 across the large MSOs. It's not a huge number. Most of us are in those names already. So I see the ability for the debt to refinance the industry definitely being there. And I think, any of the consolidation coming back to earnings broadly, I think we will continue to see the same trend. Tier ones will continue to have better margins and they'll be less impacted on the sales declines. And the tier twos, the weaker of those, will continue to have terrible metrics. And I think it will beg the question, so if you are a tier two, what exactly is your 24-month strategy in order to compete? And if it's, we hope the equity market gets better so we can issue equity and deleverage our balance sheet and get my stock options back in the money because I'd like to get paid, that may happen. But I think really what's going to happen is you're just going to have to, people have to get bigger, leaner, cut costs. Pablo, we did an analysis, a mid-size kind of 300 to 500 million top line MSO. I mean, you have between $25 and $40 million of savings annually just by getting rid of that company and putting it into another one. Between the public costs, the CEO, the board, the management team, the duplicate aspects all across the industry. And many of these companies, let's just use the low end of that range, 20 to 25 million. That is a meaningful amount. So, I think that's where we are. I think debt's going to lead the way. I think the equity is going to have a tough time. And I think we'll merge a year from now with fewer companies that are better capitalized, better run. I think scaling in the industry is super difficult. I think having a great manager that can run a 60,000 square foot cultivation just doesn't do a great job on 500,000. I think running 5 stores versus 600 stores or 100 stores or 200 stores, just a very different animal. And I think the quality of the management teams across most of the public MSOs are average at best. And I think the better people should be running these companies at scale.
Right. Erich, I have someone asking me in the case, obviously, Dan and Peter, they are from public companies. People can go and buy their stocks in the stock market. How can people invest in FiSai investments? Obviously, you're a private fund, but
FiSai we are closed, unfortunately, but so I apologize. We're fully invested and closed at this stage, but we'll be looking potentially to raise money going into the refinancings. My view, I don't know what you think, Dan or Peter, but like the 2026 maturity wall is all going to refinance next year. Most people that can are going to so we're going to see real good refinancing pushing out the maturities. So I think there are going to be opportunities to invest into either Peter or Dan's businesses. I think those are great businesses to get into. So that's all I have.
Okay, thank you.
You can post a Venmo link, Erich, and people can just shoot some money over.
Well, it's an institutional size fund, so any institutional wanting to call us.
That's good. One quick question from someone asking about the hemp industry. We are talking about hemp drinks. We've hosted calls. There's a number of brands, fast-growing sector, more MSOs entering the category, hemp-derived drinks, as well as companies in the hemp derivatives industry, where vape, gummies. Is that an opportunity for companies like yourselves, or not really, somewhat off limits right now due to regs? Short answers, if I can. Dan.
I think so. I went out to, I forget what the conference was in July. It's like a smoke shop hemp conference in Vegas when it was 115 degrees out. And it's just, I think that side of things, like all of these guys are based in Fort Lauderdale. They're the brands in terms of the top 10 in these turnover all the time. There's a couple layers of distribution to get into the smoke shops or gas stations. So a lot of the margin gets sucked out. DTC is difficult. I think it's just too emerging not fly by night. There's some real businesses, but just not as mature as it needs to be to take in institutional capital. I think, some of the guys out of Minnesota on the beverage side of things that have real play into some of the big alcohol, bev, or other, beverage distribution networks are definitely an opportunity. The issue with us on our side of things is most of the time that's asset light as opposed to asset heavy and appropriate for the mortgage REIT. So, Peter on the BDC side of things in Chicago Atlantic probably has a little more wiggle room there than us on the AFC side.
Yeah. I'm eager to see how the industry matures. I think one of the credit positive aspects of the credit cannabis industry is its highly regulated framework and barriers to entry. And these are credit principles that apply to we could apply to any industry, not these specifics. And we haven't quite seen those barriers shake out and become really clear to provide really strong credit profiles yet, even though there are some really strong operators that are extremely profitable and still growing really fast.
This feels like CBD in 2018.
There we go. Right.
Is kind of my view.
Well, thank you. Look, I know we're out of time here, but thanks to all the 3 speakers for joining, sharing their thoughts here, and of course to everyone that joined on the line. Closing remarks, anything you want to add here, Peter? I'll start with you.
For the operators on the call, we spoke about a lot of uncertainties, some good, some bad in the market coming up. We'll be deploying capital in the space regardless whether Florida is yes or no. whether 280 is 2025, 2026, or 2027. And despite disappointments, there's still really attractive opportunities in this industry, still really attractive opportunities to start a business, to apply for licenses, to buy additional businesses. And we're excited to be there for all of it through the ups and downs.
Thank you. Dan?
Spoken like a true industry vet. I think that's everyone in this industry on both the operator side of things and the debt side of things. Like we're despite the uncertainty, as Peter said, we're all skating towards the same goal and willing, ready, and able to invest capital behind this industry to help the growth and help the expansion of companies out there. And so, we've seen better times. We've also seen a lot worse times, and we'll continue to deploy capital at attractive risk-adjusted returns and finance growth in the industry. The one thing I'd say, just to end on a little bit of a higher note, is I actually think that Amendment 3 is potentially more important than Schedule 3, at least for these stocks, because as we discussed earlier, 283 is already out of the cash flow. There's still the historical liability. It removes the future liability, but you're going to have to deal with the historical tax liabilities, even if rescheduling passes. And Florida is a big market with guys with big exposure that could be very impactful to folks' P&Ls and operating performance. And operating performance drives stock prices. And so, I think in the intermediate term, Amendment 3 has the potential to have a significant impact on the operating performance of some of the large operators in the space. And while not everyone is there, that potentially drives some additional capital into the space. And so that's the one that I'm watching more closely. And I think it's going to be tight. Like 60% is a high number. Polls are above that, but historically polls have come in a little bit, the actual voting is a little lower than the polling numbers. But gun to my head, I think it passes, and I think it could be really impactful for not only the people that are there, but a bit of really good news in a sea of uncertainty and lack of other catalysts.
Thank you. Erich, closing remarks.
Yeah, I think, 2025, I think the last 3 years, the companies that have remained solvent and have grown market share have done amazing jobs. I think we have some truly amazingly well-run companies when you think of what they've had to go through, having been a founder of a company. I know you know the same thing, Dan. So I think the slate, and I talk mostly of the major MSOs, the tier ones and tier twos. I think a lot of them are really well run, some aren't. I think you are going to come out of this time next year with bigger, better run companies, with better balance sheets, with larger footprints. And I think really start to see the emergence of some amazing winners. And I think if you are able to participate in that, it's going to be great. And from us on the debt side, we see our credit metrics improving. And I'm generally quite bullish, although I think that it's going to be a bumpy road. Dan, on Florida, I mean, I really do hope for two reasons. One, I think it's going to be great for the industry, and it will be nice to see DeSantis actually lose again. I mean, he has been just so vitriol about something that really he shouldn't be. And I think if you break a really hardline MAGA's back like that on this topic, maybe they just go after other stuff. There's so many other issues that they can go after, if it's the border, if it's trans kids. Like there's so many other things. It's like you want to just hope that at some stage they say cannabis just should be. I mean, you read it in Donald Trump's letter. Let's just do what we need to do. Let's regulate it. Let's tax it, and let it grow. It would be nice to get this foot off our neck. And you look at Florida, and I think that really is. Kim has done an amazing job. Kim, thank you for everything you've done. I hope you win, and I think I'm hopeful that then you get to north of 60% of the US has legal cannabis. You're getting close to 30 states. I just hope that at some stage it just becomes a battle not worth fighting.
Good, thank you. Thanks everyone again for joining, and thank you to all the three speakers. Everyone have a good day. Thank you.
Thanks
Thank
very
you,
much
Pablo.
for having us.
Always, hey? Appreciate the work you do.
Thank you.